Well, thanks for tuning in to day 3 of the World Economic Forum coverage in Davos on the NDTV network. And it's an absolute delight to be talking to Dr. Anish Shah. Needs no introduction, of course, but would be lovely to understand from him how is he seeing the atmosphere, the optimism or the lack of it, and the mood in the Trump 2.0 era. Dr. Shah, thanks for joining in. The day one was obsessed with what Donald Trump might or might not say and do. He brought out the uncertainty factor for sure by saying that, hey, tariffs are coming, but let's wait and watch here. How do you see the mood here at the WEF when it comes to growth and outlook for 2025? And your own view, of course.
Good morning, Neeraj. Pleasure being here with you.
Thank you.
Based on
discussions with various global CEOs, we see much more optimism than I would have expected. And that optimism is coming from the fact that the U.S. economy is likely to be further on the upswing. That's driven by many of the actions that President Trump will take. Yes, there will be some issues with regard to tariffs, some level of deglobalization as well, but there will be bilateral deals, and that's one of the areas that countries will look forward to. So, on balance, we see a much greater level of optimism with regard to the global economy.
Okay. What's your own sense here? Because you are present in the U.S., so U.S. economy doing great is good for you. I mean, U.S. exceptionalism, third year in a row, who knows, it'll be great for you. But you also have such a larger presence in India too. How does all of this augur for growth in 2025 from your perspective?
So we are very optimistic. We see the U.S. as an important market. We've been manufacturing tractors there for the last 25 years, and we've got a very good position in the tractor space that we play in the U.S. In addition, Tech Mahindra is well positioned there. We've got a lot less dependence on H1B visas, and therefore we're ready to grow in the U.S. India has great fundamentals, and India will add as much GDP globally as will the EU by 2030. So we're seeing this market as a very important one, and we are driving our growth ambitions in India.
Got it. What do you feel about the first 3 quarters, if I can call it a lull, so to say, relative to what we've seen in the past? Is it a pause before an uplift? Is it possible to even predict that? Or is it a wait and watch approach when it comes to the Indian economy per se? And again, what is it that you hear from your counterparties that you speak to who might be investing into India through you?
So we believe the fundamentals are very strong. We will always have some blips along the way. We saw rural being weaker for the last year or maybe 18 months. Rural's come back fairly well now. So we will continue to see some pockets have some level of weakness, but that's par for the course. That nothing's going to work in one straight line, but the fundamentals are strong. The path forward looks very good, and in terms of what we hear from folks around the world, they're looking at India even with a greater degree of urgency than I've seen before.
Wow. So, in some of this would be helpful for the tech businesses that you run. Though, interestingly, this whole H1B visa and green card news came in. By the way, does it have a material impact on the tech sector employees, or is it now a lot of hire local for the US and offshoring might be a little less than what it used to be? Any thoughts there?
I think it's too early to say. We'll have to see how this develops. I just saw that 18 states have filed lawsuits against it as well. So I think there's a long way to go before we get the final outcome as to what will happen.
Okay, fair call. A bit of a focus on auto, naturally so, because you're creating quite a ripple in the markets with the kind of products that you're launching and the kind of pricing too, Dr. Shah. Now, a lot of people are saying, calling it, my own analyst calls this a daring strategy, wherein you are daring the market that, hey, I'm coming on with a product which is priced at a punchy level. Come and try and see if you can disrupt my sales. Now, I'd love to know what went behind that thought on the pricing, because we've spoken on the product before. We haven't spoken quite on the product and the pricing together.
So our approach is to drive profitable growth, and therefore our pricing is not to just go and get sales right now and then worry about profits in the future. That's not how we work. Okay. So what you're seeing is actually the strength of our product development, the ability to develop world-class products at prices that are very competitive. And we've seen that across multiple ICE products over the last few years. You're seeing that in electric now.
Yeah, certainly. So, but is this a factor of a particular gross margin that you want to make, or is it also positioning that you want to do with the first of the, well, technically not the first, but the first of the really new age, cutting edge looking and feeling products that you launched on the EV side?
We will always look at gross margin as a factor, and that is an important one. When we launched the XUV700, there were the same set of questions on pricing, saying, are we being very aggressive on pricing? And that's one that has worked well for us. It's a product that gives us good margins. And similarly, we are building the EV portfolio with a set of outstanding products that are priced very well for the consumer.
Sorry, I'm just probing this a little bit more. By aggressive, I don't mean it in a negative fashion. All I'm asking is by design that you're choosing to be a bit more aggressive because you want the product positioning to be of a particular type?
We believe that it has to be a product that is affordable for the customers that we serve. And therefore, we've got to develop it in that manner. So aggressive is not pricing below cost or pricing in a way where we're going to make losses to get market share. It is pricing based on the product that's developed with reasonable margins and one that we feel is required to be able to create a much stronger EV portfolio that we will develop over the next few years.
Okay, last question on autos per se. So there are two strategies. I'd love to pick your brain on this. One is that people start with a low priced model and then eventually inch up higher as the particular brand gets developed for a new product. Are you going the other way, wherein you are pricing or coming out with a premium product first, and then maybe you will look to launch lower priced electric vehicle options in that same category?
So our product strategy is more based on consumer lifestyles, and we will have products that meet various different consumer lifestyles. You see this in the B6 and the XUV9e. They're two very different products.
Fantastic looking both, by the way.
And yes, we hope that all of our products are fantastic looking. We've got a great team and they're doing a great job there. So for us, it's not about just price. It's about creating that product for that lifestyle. And therefore, we will have some that are more premium. We will have some that may be less premium, as you call it, but catering to a set of customers that want that type of product.
Okay. Last couple of questions. One is this whole tractor upcycle piece. Now, I'm just wondering if you are even more bullish on the tractor division in 2025, because while the Indian tractor upcycle was always a belief, what you spoke in the opening answer about the US GDP growth and what the tractor business could do out there, does it make you feel that 2025 could be one of the best years in recent times for the tractor business?
We've seen good years in recent times as well. The first year of COVID was one where the tractor market grew 27%. We don't expect that level of growth at this point in time. Sure. But our business is doing very well. We are at a 44% market share, up 4 percentage points, which is not easy to do when you're in the 40s. And that gives us, again, a lot of confidence that, yes, the market is looking positive right now. Our business is positioned well. So we will have a good year.